Hello, hello, and welcome to February 4th Alpha's lead American Express 28%. Let's go look at that chart. There it is, 28% for American Express. We are using the 3-to-1 ratio. Prior to this on this new challenge for 2021, we were doing last bar low, which would have been very nice for American Express. You'd still be right there. But the bottom line is that we got down to the 3-and-1 for the new challenge. I need to review the strategy is stochastic strategy, because we have some new followers. So here we are. So the way it works is that we have stochastics is dropping, and when it starts having an uptick, like right in here, and it's matched by the RSI, and you have a green MACD histogram, you look to the high of the candle or the top of the body of the candle for the entry. Now you see the price drops, no entry. And the parameters still have to match. So right here we had a red candle. So if you come back and look at your parameters and look at the wait a minute, I got a red MACD today. I have a dropping stochastic. I have a dropping RSI. Cancel the order. Yeah, cancel the order. Don't take a chance that this just might be a reversal. Wait for the conditions to be favorable to you. So the MACD now stochastics leads. Stochastic is the first indicator. Then we go and check the RSI. If the RSI yes, we are in an uptrend, and then MACD histogram says yes. Then you have three yeses. Then you enter on the again the top of the candle or the top of the body. I this is this is discretionary. I like to have a little bit of distance in the body. So if this is too tight, like right here to that bottom, it's like, yeah, you know what? I'm going to go a little bit higher. I'll go to the top of the body. So this becomes a point of where you feel comfortable. But try to not your spread between your entry and your exit should not be greater than $4. Um, Now, also too, you have to watch out for pattern day trader for counts under 25,000. Notice that I'm in the penalty box still for 2 points. That's another criteria that's most important. So how do accounts under 25,000 avoid this? Well, if you look at my previous video, I believe it was yesterday, the day before yesterday, there are I state the three rules, but I'll go over them real quick. One, put your stop far, far away, way down here, like in Never Never Land, for the first day, called the initial exit. The other is don't trade. Simple as that. Don't trade. And then what is the third condition? Oh, I'm having a senior moment. Sorry about that. Um, there is stops far, far away. Don't trade, and that's it. I mean, there is a third one, but I forgot what it is. It's probably in the same conjecture. All right. Oh, no stops. That's it. The third one is don't do a stop. Yeah, and there are traders out there who will get into these options trades and will not have a stop. Why? They want it to run. Either it makes the money and gets or gets stop or dies on its own. But then those are leap traders. Those are options traders who will go out 3, 4, 5, 6 months in advance and just set it and forget it. I knew one trader at CBS Middle Management. He would do $200,000 is his was his option trading platform, his option amount, and then he would do what they call leaps. So he would go and look and say, okay, this is a nice condition. Okay, fine. I see a nice flat line. So therefore, there's a nice uptick. He'll go way out here and buy an option way out here, probably at the money or at par, which means anything above that, and providing that the other criteria are strong in the market, he comes out with a profit at the end of 5 to 6 months. All right, so that is the explanation for the new followers on what stochastic strategy is about. You have three ups, enter on the high, and then you now on a 3-to-1 ratio, you would end up putting you look for a like right here is a gap. So right here is the bottom. But remember, for under 25,000, day pattern trade rules is that if you get three and if you get four, your account gets frozen and that's happened twice to me. So I'm using the far, far away. So when I do an entry, I'll put a far, far away exit. Okay, let's go on now to our next leader, which is Nike. And here at Nike, uh, Nike started with his first stop way down here. Now that we got filled and the day's closed, we move the stop up to the 3-to-1 ratio. And the 3-to-1 ratio means that we're rescuing 1 unit of risk for a 3 unit return. That's what that is. And try to, when you set up your ratio, your Fibonacci ratio, what you want to be doing here is you want to be try to see if you get your target is within the current or the current past current price. And the reason why is because the price has been there once before, it will return back. That's what portfolio managers do. They look to buy down here. The long term portfolio managers will buy here and then write it out, collect the dividends, write it out. And then when price gets right back up in here in this area, which is usually between anywhere between 15% to 30% return, they pull the trigger, pull them, take the money off the table. Trading is like a poker game. The money goes into the pot, into the market, and the money comes out of the market on your call. You don't even have to show your cards. You just say, "Hey, liquidate, take my cash." So that's what that works out. So XLE is here now. At XLE is also got past this initial stop, and where our stop is now here, looking for a 2-to-1 ratio with just a little bit on the high side. Uh, but an energy just might be doing a no comeback to see what happens. Um, then we have PGR, Progressive Insurance, and their initial stop has been done. So their stop now is here. So I have a nice little right off the, cause I base it off this candle here, and this is my risk for the 3-to-1. And look right there. Right there, we're in. Now, do we get out right there? Not exactly so. When price closes above the third ratio, the objective would be is to then do a trailing stop or a last bar low stop or a dipper stop, something to protect profit, but at the same time let the position run. Okay, that takes us on to Bank of America, and at Bank of America, we got past our initial stop. And there, look, now I'm saving it because I can use it in the future. Bank of America owes me 21.87. That's what all this data is about, and explain. I'll explain that more as time goes on for for the new followers. But it's not complicated math, people. I just all I did was put all the information together in one little box. But the bottom line is that we started with the initial stop way down here, got filled, and now our stop is here for the 3-to-1, and we're looking for a. Now I know Bank of America was much higher than $34 in the past, so this is not going to be new territory. It will not be what they call all new time highs. Now we come on to TJ Maxx. Now, if you recall, TJ Maxx yesterday got stopped out because I did a very bad error, and that was when I put in the order ticket. The original, I put in the order down here in the original. When I did my order ticket for the exit, I put in 6344.00, essentially 6,340. Anything below that was sell. Well, sure enough, it opened and it sold because exactly what happened was with prices below 6,340. So I got stopped out, but now we're back into the trade because requalified. Then that's TJ Maxx, and that is it. Wow, time's up, guys. I apologize. The binaries did not do well today. We're still in recovery there. Went back to the books and going doing basics. So, with that, we'll conclude today's report for American Express at 28%. And I thank you very much for stopping by and checking it out.